Are you preparing for an accounts payable interview in an Indian BPO, shared services center, or finance and accounting process? Then this video is for you. In this video, we are going to understand the complete accounts payable accounting entries from beginning to end. We will start with the purchase order, then understand what happens when goods are received, how the supplier invoice is recorded, how the accounts payable liability is created, how payment is processed, and finally, how the payment is cleared through the bank. We will also discuss important concepts such as GR, IR, three-way match, payment clearing, quantity mismatch, and price mismatch. So, let's understand the complete accounts payable accounting cycle with one simple example. Let's assume ABC India Private Limited purchases 100 laptops from a supplier. The agreed price is $10,000 per laptop. So the total purchase order value is 10.0. The company creates the purchase order with the supplier. At the purchase order stage, normally there is no accounting entry. The purchase order is a purchasing document that tells the supplier what the company wants to purchase, at what quantity, and at what agreed price. At this stage, no inventory is recognized. No accounts payable liability is created. No payment is made. And normally there is no accounting entry. Interview question. Does creating a purchase order create an accounts payable liability? Answer. Normally no. A purchase order is a purchasing document and does not itself create an accounts payable liability. Next, the supplier delivers the 100 laptops. The receiving team confirms that the goods have been received and posts a goods receipt or GR. Inventory is debited because the company has received the goods and inventory has increased. GR, IR is credited because the goods have been received but the supplier invoice has not yet been recorded. GR, IR is an important part of the accounts payable process because it helps bridge the timing difference between receiving goods and receiving the supplier invoice. Now the supplier sends an invoice for $10. The AP team receives the invoice and performs the required invoice validation and three-way match. The purchase order tells us what was ordered. The goods receipt tells us what was received. And the supplier invoice tells us what we are being charged. If the relevant details match according to company policy and tolerance limits, the invoice can be processed. This is one of the most important accounts payable accounting entries. The GR, IR account is cleared and the vendor or accounts payable account is credited. This means the company has now recognized a liability to the supplier. In simple words, the company now owes the supplier 10 rubles. After the invoice is posted, the supplier's account shows an outstanding liability of 10% zero. This is now an accounts payable balance. The AP team will monitor this invoice based on the payment terms. For example, suppose the supplier has given the company 30-day payment terms. The invoice will become due for payment according to those agreed terms. Once the invoice becomes due, the accounts payable team processes the payment. Depending on the company's process, the AP team may check payment due date, payment block, vendor bank details, payment proposal, approvals, and available funds. In a simple accounting setup, the payment entry is: this entry removes the supplier liability and reduces the company's bank balance. However, many ERP systems use an intermediate payment clearing account. Let's understand that flow. Depending on the company's ERP and payment configuration, the payment may first be posted through an outgoing payment clearing account. The vendor or AP liability is now cleared. The supplier's outstanding balance becomes zero. The payment clearing account temporarily holds the payment until the actual bank transaction is confirmed and reconciled. Once the bank processes the payment, the transaction appears on the company's bank statement. The bank reconciliation team matches the payment against the outgoing payment clearing account. Now the payment clearing account is cleared, and the company's bank account reflects the actual payment. So, this is the complete accounts payable accounting cycle, from purchase order to goods receipt, from invoice posting to AP liability, from payment processing to bank reconciliation. Now let's quickly understand some common accounts payable exceptions. The company has received the goods, but the supplier invoice has not arrived. The GR/IR balance remains open. The AP team may follow up with the supplier or procurement team. If the invoice is received before the goods, the invoice may be blocked or held for three-way match, depending on company policy and ERP configuration. The AP team may identify a quantity mismatch and investigate the issue with the supplier, receiving team, or procurement. If the invoice price is different from the PO price, the AP team may investigate the reason and follow the company's exception handling process. Here are 3 questions you may be asked in an accounts payable interview. What is the accounting entry when goods are received? Inventory is debited and GR/IR is credited. What is the accounting entry when the supplier invoice is posted? GR/IR is debited and vendor or accounts payable is credited, subject to the company's ERP configuration and accounting process. What happens when payment is made? The vendor or accounts payable liability is debited, and depending on the process, bank or an outgoing payment clearing account is credited. So, remember, this is the complete accounts payable accounting cycle. The purchase order starts the purchasing process. The goods receipt records the receipt of goods. The invoice creates the accounts payable liability. The payment settles the supplier liability. And bank reconciliation confirms the movement of cash. GR/IR is just one important component within the complete accounts payable accounting process. If you're preparing for an AP job in an Indian BPO or shared services center, understanding this complete flow can help you answer both accounting and process-related interview questions with confidence. Thanks for watching and all the best for your interview.